Hi, everyone, and thank you so much for tuning in to another episode of Unlocking Venture Capital. I'm your host, Sydney, and we have Sydney today as our guest. Hi, how are you doing?
I'm doing well. This is, believe it or not, my second meeting this week with another Sydney. I feel like it's a good omen, good when all the Sydneys get together. But yeah,
Perfect.
I'm
Such an
excited.
uncommon name, so very
No.
funny you have such frequency on your calendar. Be a
Yeah.
top priority.
Yeah.
Amazing. So we met because we're both Canadians in the venture capital ecosystem. And so Sydney was actually one of the investors in residence at a program that I did in Toronto as well. So would love to hear your journey about how you got into venture and kind of where you're at now and what you're working on, what your focus is.
Sure. I think I fell into venture a bit untraditionally. I've always been like STEM focused. My whole life, I thought I was going to go to med school, be a doctor, the way there's, I think, lots of us that grow up kind of with similar goals. I went to university to study chemistry and I found myself watching Dragon's Den and Shark Tank as I was studying or completing assignments. And I had so many professors and so many friends who were like very politely trying to push me to recognize that I perhaps was studying something that I wasn't super passionate about. I think where I'd had my sights set on it for so long, it was like a really difficult thing for me to swallow. And had been someone, a faculty advisor had recommended, hey, we've got this course at the university. It's taught by the director of investments of our regional fund. You get to work with real companies, go through the investment process. If this is something that you are interested in, you might enjoy this course. And I needed six credits to graduate. So I thought, okay, why not? And I took the course. And I still remember like phoning my dad after the first course. And I'd never been so excited about anything that I had studied or a course that I had taken in university and thinking, this could be it. I love this. I can't believe I get to study this all year. This is so exciting. Ended up like putting everything I had into this course for the year, developing a really great relationship with the instructor who I still work with. He's our CEO of our startup today. So he was the one who ended up like post graduation. I begged and begged for a job at the venture capital fund, and we've worked together ever since. So I spent a couple of years in VC briefly before he and another one of the members of our venture capital fund decided to start our own company, which was spun out of some of the challenges we had experienced in the due diligence process, working specifically with early stage companies and their financial models.
Yeah, yeah. So, and I'm sure that, there's a lot to unpack there. And so, one of the things that I wanted to point out was as Sydney is explaining her journey, it sounds like she just went like in a 2 block radius. And this is something that's really difficult to tell other people, but the Canadian ecosystem is very tiny.
Yeah.
And especially in venture and startup, just like we're just like very, very small. So yeah, it's super funny that you were very much inspired by, the Canadian Dragon's Den. Have you met any of the Dragon's Den judges or contestants or anything like that? And how did you experience that?
I've worked with a number, I've had the privilege, and I fangirl every time I've had the
Me
privilege
too.
of working with a number of the companies that have gone on to pitch. I have yet, if I think I would burst into tears if I ever got to meet Arlene Dickinson in person. I just think everything she stands for and everything
Yeah.
she the way that she like champions herself and especially her role in business over time, I absolutely adore her. But the we did our previous fund had co-invested with one of her Dragon's Den investments, and another member on our team had printed out just the last back page of the term sheet with her digital signature on it and stuck it on my desk one day as a motivator to kind of finish up a couple of files I
Oh
was
my
working
God. I hope she sees this now. It's so
on.
funny. I did actually have the chance to meet Arlene Dickinson a couple times. The first time it was in university, so it was very similar to your story, how like in terms of how somebody refers you to something and then you do it and it's the most incredible experience. But I was too shy to talk to her. I was like 19. And then then she came back to Concordia University and got like an honorary from Concordia. And
Yeah.
she's like, I still remember you. I'm like, but I didn't say one word. Because I was like, I didn't know what to say.
Oh my gosh. Yeah, I just think she's so inspirational and I love the way she champions, especially a lot of conversations around like shifting your career path and that you don't only have to have one. I feel really guilty when I talk about and I almost already regret the language of falling into venture because I know it's such a competitive ecosystem and landscape.
Other thing I want to ask you for sure. Yeah. So
I just love the way that she talks about that and all the different ways that people can get involved.
yeah, absolutely. And so speaking of that, because about like a big portion of our audience are people who are emerging into VC. You were in VC, and dude, why'd you leave? Why
I know.
did you leave venture? What are you doing? And also, like, how do you see yourself coming, if you see yourself coming back and in kind of what capacity, you
Mhm.
know? So would love to unpack that part of your journey. I'm sure
Oh,
a
I
big
love
part of our audience is really
that.
interested to know.
Yeah, it's interesting. I still consider myself so like with our startup company, we're actively working with the earliest stage companies as they're fundraising. We are so connected to the venture capital ecosystem. In some ways, the fund that I came from had a bit of a geographic scope to how they invested.
For
I
sure.
feel if
Yeah, yeah.
anything that
Because of
my
LPs.
right. And I feel like my scope and my awareness and my network with other regional international VCs has, if anything, grown since joining the startup. So I still consider myself plugged into the ecosystem. I just don't cut the checks anymore. I left, when I started, I found, and I feel like I've spoken to a lot of folks who early in their venture career feel this way. You start to get trained and your fund has a thesis and you kind of get siloed into like approaching an investment
Yeah,
process from one
yeah,
lens, one
yeah.
perspective, right?
Yeah,
So
you're out of recognizing.
100%. And so it was actually the course that you and I met at when I had taken that the first time. It was the first time that I got to stop and think about, almost if I had my own fund or if I was investing my own capital,
Hmm.
how would I do this differently? What's important to me? How would I change the thesis and the approach? And I had so much fun doing that for a week. And then I came home and I realized I just didn't have that same flexibility or that freedom in the thesis at the fund I was at. But I felt that there were skill sets and ways in which founders could better prepare themselves to align with like a greater or a broader investment thesis by really understanding how to operate their business. And
Yeah.
so when members of our team had talked about wanting to tackle this challenge from financial modeling, I thought, hey, like I think I can work with more. I really love working with female founders. I really love working with minority founders. And I love helping people take revenue models that aren't that traditional up into the right hockey sticks like SaaS growth and teach them how to speak to it and get investors excited about it as if it were and show off that growth potential and that opportunity. So I felt like I could still be connected to the ecosystem. I didn't have to cut the check, but I might still be able to help early stage founders influence raising larger rounds of capital. And for right now, that's 100% mission aligned with how I want to be working.
That's amazing. So that's really interesting because, like, of course, as you said, it's a very competitive space. So choosing to leave, choosing to like be in a startup environment again is completely, completely different. And when people have ever asked me, like, why don't you start your own fund instead of work for a fund? And I was like, I don't want to be a founder again. Like I've already been a founder. I already did it the other way. So it's really interesting that you're choosing to kind of go into this path. So in the future, do you see yourself working in startup environments? Do you see yourself becoming an LP one day? And if so, like what is your internal thesis if that happens? I'm always curious to know what our future looks like, especially because our ecosystem in Canada is so tiny. Every individual can make pretty big impact because you're the only one. There's only like five of you. So yeah.
Yeah, I love that question. I would always keep the door open to going back to venture. I think, and I've gotten a lot of feedback and I experience it now being on the operating side. I totally understand why there are funds out there who will only employ past operators on their venture capital team because I
Yeah.
think and I hated it when people would ask me that when I was a VC and say things like, you don't know, like, how do you know you've never stayed up until midnight trying to figure out how to get payroll to happen tomorrow and things like that.
Valid question. Yeah.
And I really thought that I was being sympathetic to them and that I really was doing everything I could to understand and to help them. But it's so completely different when you're on the other side of the table. So
Yeah.
if anything, I would love to challenge my own approach of how I was a VC before. If I were to go back, I would be a completely different venture capitalist. And I just know that just
Yeah.
from even the short time that I've been on this operator side of the table. I think my thesis would certainly have a diversity component to it. I know that there are lots that are in Canada that are trying to make a lot of waves in that space, but I still don't think there's nearly enough. And I think that call to action has really resonated in a lot of the work I've done today. I've been fortunate to be connected with a ton of phenomenal women-led businesses, and I think they deserve all of the capital and all of the support in the world. right now, it's like just where I'm at today and experiencing the shifts in the ecosystem, I think Canada has an incredible need for more pre-seed investors that are willing to invest with less revenue traction, invest at like an earlier stage of product development and take on that risk. I think it would be a shift that would really put our ecosystem in a position to compete better with the pace of due diligence in the US. I think it would be a challenging fund to raise.
Yep,
Uh,
definitely.
but I think it would be desperate. It's desperately needed in our ecosystem.
Absolutely. And having that kind of futuristic look is something I completely agree with. That some things that are done in our ecosystem is a little bit outdated and definitely needs that revamp. So I think you're on the right track there. So that's fantastic. And in terms of just to kind of give people an idea about like, how that really works, your LPs are sometimes dictating where your fund can invest. So like Sydney said, the geographical scope was one of the criteria, and it could be a constraint, could be a limitation, it could be an opportunity. It just depends on how things are done, right? And so a lot of funds in Canada do tend to take money from the Canadian government and certain kinds of LPs that might give you these kinds of restrictions. So just going back to how you are seeing this ecosystem evolve as it is growing, because Canada is such a new ecosystem, and how it's evolved and hopefully becoming much more mature and much more advanced. Do you see geography? Do you see certain kinds of founders, emerging markets, those kinds of things evolving in a much more modern way? Or do you think that it has to do with so much of what the LPs want and so much of where the money is coming from into the fund?
I think that that last point about who are the largest LPs in Canada, where that capital is coming from, is a huge difference between the Canadian and the US ecosystem.
Yeah,
I don't
yeah.
think we have enough high net worth individuals choosing or seeing venture as an avenue to pour their capital into. And I think we need to continue to incentivize and develop more pathways for individual LPs to get involved in that way. Geography is interesting. Canada operates, I would, in like a super cluster model, where we start to see, even from like a research perspective or a community and education based perspective, these hubs that are very much tied to geography.
Yeah.
And you start to see that ripple effect of sector-based venture capitalists kind of huddling and creating ecosystems kind of around those centers and around that programming, which is wonderful. I think it creates like a clear point of attack for founders in AI or in oceans to find that community center, work with the best. I think it makes sense. But would I love if Canada had more of a holistic investment approach, or I should say one where founders felt more comfortable stepping outside of their geography, playing and bringing in US investors and knowing that their Canadian investors are going to play nice and match the pace and
Mhm,
things like
mhm.
that. I still feel like when I talk to founders, especially if they're raising for the first time, they're either hesitant to go to the US, they have no idea what that process is going to be like. They're worried that by bringing in US investors, the Canadian investors might see that as, might not be interested in the fact that they're doing that so early, or might be worried that the US investors are going to validate a higher validation than the Canadian
Yeah.
investors are willing to play with early. It's such a delicate dance. But I love when founders are willing to take that early risk and kind of shoot their shot with anyone. And I find these really dynamic rounds that get pulled together from players that aren't really necessarily tied to geography. Yeah, they end up coming together quite well. And the founders that I've worked with in that situation have always like really benefited from it.
Absolutely. And I think that, when it comes to an ecosystem that is growing, I would love your take on this to see if there are gaps in the VC ecosystem as well that needs to be covered in order for us to all kind of grow together. Just like what your startup is doing, the reason that that came out is because there is a need in the market, right? There is a lack of education, a lack of services that is in the market at early stage, right? But then what happens to growth stage, and is our Canadian startups going to kind of continue to be selling early, to be M&Aing, very, very early at very affordable valuations, let's say? And what kind of services or gaps are there in our ecosystem that would then fulfill that, either facilitate it or cover it to go to that next stage, whatever the case may be.
Yeah, I think that the education barrier is huge. And we put out a call to action for free registration for evaluations, of just a free hour-long webinar on evaluations. And we
Amazing.
sold out 100 tickets in 72 hours with like zero advertising. And we thought, oh my gosh, what, like, I'm almost nervous that this many people want to talk about an intro to valuations. We had an idea, had been coming up in customer calls, but we had no idea that this many people were like, yes, I need to understand this. And we're finding that even on our intro calls when we're working with early stage founders, we reference a lot of market data and benchmarking and things like that, and forget that it might not be intuitive to a first time founder or someone who hasn't done that level of due diligence or that level of kind of due diligence is what it is, to know how to go and validate or interpret some of this information. I'm a big fan of the SaaS North conference that happens every year in Ottawa. I find it's a great source for updated metrics, updated benchmarks, kind of the source of truth. And it's the place that I start for that fiscal year with kind of what's my update on what runway is going for these days and things like that. But I think I've worked with a lot of founders who, when they finally get their head wrapped around how to interpret market data on startups, it's outdated and they're not catching where to go for their source of truth or what the correct metrics they should be tracking for early stage companies. I just think there's a huge educational uplift for founders who are expected to be subject matter experts in whatever it is that they're building, but we also expect you to almost be like a little bit of a startup lawyer and be a little bit of have a little bit of an awareness of due diligence and raising capital, and also be a little bit of an accountant. And I feel like accelerator programs and mentorship and things like that, kind of, sure, they bridge those gaps, but venture capital in its essence is so subjective. It can be really hard to find a source of truth and not take all of this feedback as just strictly someone's opinion. I can imagine that gap creates a lot of mud for founders to have to slog through in the early stage.
Yeah, absolutely. So, I mean, like one of the things that I've constantly, because I've been in startup and venture for about 10 years, and, the valuation methodologies hasn't necessarily changed, right? The formulas are the same. That you do the top seven and you're probably going to use the first three. And so then when it comes to whether it's Canada or US, what's interesting is like your valuation for sure is going to be different because you are raising with certain kinds of expectations. And so what Sydney is saying is also just like if you have a US lead and then you come back to Canada and be like, I want to fill in the rest of the round, it could be great, it could be terrible, but
it changes the game.
Yeah, exactly. It changes the game. And as a founder, you suddenly have so many different options to be like, well, this is what our hard commits are. What are you going to do about it? And they could either really, really, really want to be in and therefore bend their own investment thesis and bend their own policies and criteria just to be in on this round because they really believe that this is going to be, the ride or die situation with the startup. Or they can just be turned off by all the different ones and just kind of completely put you in the dark and never really tell you. So, I mean, we only, like at the family office fund, we've only ever invested in as like a follow-on investment, right? So they already have to have a lead and they already have those term sheets and everything, but we still do all of our due diligence and valuation and all that stuff because we have a valuation cap. And that is also really tricky because founders never know what that cap is. Accelerators and incubators don't know what that cap is. And the reason also why Sydney's course is so incredibly popular is because they don't learn it anywhere else. They don't learn it anywhere else.
The volatility of it too. We get a lot of founders who are like, okay, well, give me my fundraising plan. Like, if this is what I'm raising, where do I start? And I think until you've gone through the experience to understand how piecemeal and how rapidly it changes depending on who accelerates their conversation. We talk a lot about almost things that founders can do to slow down or accelerate the process in order to try to collect term sheets at the same time or to try to collect consensus from multiple investors. But you're right, the second you change the dynamic from it being two Canadian investors, you add a US investor in, the whole dynamic shifts. You've got someone potentially likely validating a higher valuation or willing to take on more risk, perhaps faster to get through due diligence. And all of a sudden that changes the dynamic with the Canadian investors. You're right, not necessarily in a bad way at all. In a lot of ways, or oftentimes it ends up being quite positive. And, the Canadian investors will get excited that there's external validation that a founder has shown the initiative to kind of cross that border and go and approach US investors. I fundamentally believe that taking on that level of risk of going and doing that at the early stage is wonderful. We don't see it enough from our early stage founders. So I think that action alone de-risks a lot of future participation for investors. They just get excited to say like, awesome, you grabbed the bull by the horns, you went for this. But trying to explain to someone that you really can't plan how this is all going to unfold step by step. You have to be willing and ready to hear the feedback from an investor as they want to provide that to you and kind of adjust and adapt as the term sheets fall. Yeah, there's no way to foresee that or perfectly plan for it.
Yeah. I mean, there are ways to know what you're not going to do as opposed to know what
Yeah.
you are going to do. So, like, for example, the CPG company that Sydney and I both analyzed before in the past, they know that they're not going to get around here because it's really difficult in this sector in Canada. But that's just because there's like most of the other investors just focus on other sectors, and that's not like their fault. There's nothing that they did. So they are raising in other countries, and that makes a lot of sense because for your sector, who are the top people who are going to lead? Who are the top people who are going to be first check in? Who are these people? So you can slowly remove from the list of all of your potentials and understand, okay, well, what does this market look like if I raise in this province versus this country versus wherever, right? And or is this going to take me so long because this is not one of the trends that they're looking at right now. And so you can kind of look at it that way. And I don't know if that's something that you are seeing kind of on your side in terms of is Canada going into other sectors that are not that they haven't traditionally invested in a bullish way before?
Well, I have to first jump back to the earlier question about what fund I would run because I would
Okay.
love to run a CPG based fund. I think that there is not nearly enough opportunity in Canada, and I think investing in products is so rock and roll. So just need to edit my answer from earlier. I think that
Okay.
would be amazing. In terms of sectors that Canada does really, really well or that they like to lean into. I do think oceans or anything in an ocean space, I could be biased being based in Atlantic Canada,
Be surrounded by
from a
ocean.
research perspective or maybe a proximity perspective. I definitely see a lot of innovation in that space. The last, I would say 5, 7 years, we have shifted heavily in agri-tech as like a specific vertical.
Yeah.
I know some folks lump that into clean tech, but agri-tech specifically from an accelerator traction perspective and investment dollar perspective has become something that we're now tracking as a separate vertical from clean tech where they used to be bucketed together. So I think that that's certainly kind of at the forefront of a lot of folks from the venture capital perspective. Like that's an area that a lot of people are seeking interest in. I've heard chatting with some other VCs that may have taken more of a generalist approach pre-pandemic with the shift in the economy and perhaps a lower risk tolerance that a lot of investors are doubling back on their original area of expertise and they're predicting, and I have no idea, we won't know this until we see it, but they're predicting a lot less of a generalist approach for funds as a whole, and that folks are really going to start to get niche and get sector specific, which I think aligns with a lower risk tolerance in general.
Yeah.
I hate to see it because I think I just love the idea of a pitch being so compelling and due diligence being a founder preparing themselves so well for due diligence that they've compelled like a VC to try something new and to take a shot in an industry or vertical that they haven't before. I think that's really exciting, and that's where we see a lot of disruption in patterns in investment in Canada. So I hope if this is the case and folks are kind of returning to their roots that we don't stay that way for long, because I love the idea of, just generalist funds taking a swing at something new. I think that's where we create a lot of new opportunity for emerging founders to create in new spaces.
That's so fun. Yeah, I really love that. And that is also just the hope for the future for sure. I love that you want that ideal generalist fund to kind of be like, I want this to live on forever. Because I also want it to live on forever. But it is very difficult because there's just so few players in the
Yeah.
Canadian ecosystem for sure. One thing I wanted to go back to was your approach for valuation and kind of how that works in a down market. So you're right, people need to constantly be educating themselves. And it is your job as a founder, whether you're a first time or second time or exited, or it doesn't matter, to constantly be educating yourself because you want to come in front of an investor with the most amount of sophisticated information that you can, right? You want to
Yeah.
be able to answer all of their questions. I mean, you and I both have had conversations with founders where they have the answers to any of the questions.
Yeah.
And you're like, you're supposed to be the expert in the industry, you know? And
Yeah.
like investors are not there to really kind of teach you everything from A to Z. because it's not possible, but you are there to provide that support, and you are still supposed to be the expert in that way. So if you are there to want a certain valuation, you have to have all of your support to defend it. So if you are in an economy, let's say in the US, you're going to go for 10 to 15x valuation in terms of your top line revenue. So you're using a revenue multiple as your valuation base. That's fine. And in Canada, you're using like, let's say 3 to 5. And the point isn't what you are valuating at early stage. The point is, what do you actually think somebody's going to buy it for in the long
Yeah.
run, right? Because my house can be worth $10 or $1 million. But if there's only one buyer who's going to give me $10, then your house is worth $10, dude. So
Yeah.
um, probably not the way you explain it on your webinar.
Actually, that is would be your company is worth whatever someone else is willing to pay for it is the exact language that we try to get across to
I
founders.
love that.
I think the where it gets difficult for folks is looking at competitors, and especially if they're doing it over the last few years where we saw such an inflation in valuations, they'll
Yes.
come back to us and be like, but so and so got this. And it's like, oh, I'm so sorry. Like you're taking a right approach. You're looking at competitors, you're doing your homework,
Yeah.
but all of the answers are wrong. All of the information
Yeah.
that you're comparing yourself to, you need that layer of context that, we are seeing valuations come back down. Do I think that early stage investors are not taking enough risks right now? Look, I wish that I think we've recovered from the last few years faster than I anticipated. And I feel like I'm hopeful that by the end of this year, we're going to start to see that appetite for taking risks kind of regenerate itself and normalize back to where we were pre-pandemic. But yeah, that approach of it's worth whatever someone else is willing to pay for it. I think so many people get caught up on how nice the number is going to look on like a beta kit release. At the early stage, it's like, oh, I just
You can buy an ad. It's fine. You can write anything you
right?
want.
It's like, oh, but this number sounds better. And driving for something so high and trying to tell people that, the faster you close this round, the faster you can put your head down and operate and start scaling revenue and get out of this, what can sometimes take 6 months, this due diligence cycle. The second you're head down, you're back in your business, you've got sufficient cash flow to fund 18 to 24 months of runway. All you are doing is increasing what that perceived value of your company is. And you should be incentivized to go in and raise a bigger round. So if your valuation on your first round is like 1.5, 2, 3 million, and you're not happy with that today because you don't want to have a $3 million company, cool. Don't have a $3 million company. Close the round of financing and work your booty off to go and grow the valuation of your company over the next 1.5, 2 years, and go and raise a $10 million round afterwards. Like that's in your power. And I think just getting people to kind of see it as what is reasonable dilution, hold on to your equity and all of those things, but as a stepping stone to getting the company to where they want to scale it and keeping their eyes in line for that. It's super accessible for you to go online and get lost in kind of all of these like unicorn stories and these hero, and every founder I've spoken to has a story, but so and so raised at this and they didn't have revenue, and I don't know what to do in those situations, but kind of
Yeah.
throw
I
my
mean,
hands up
like
and be like,
maybe
you name the one.
yeah, like ask them to be like, was it 2021? Don't do that one, you know?
Yeah.
Um, and how relevant is it now? Because it's true. There are more stories of people having to raise down rounds in
Yeah.
their subsequent rounds because the valuation was different then. And so that's very different in terms of what the market's willing to pay for. So I absolutely agree.
And fund dynamics too. You're approaching as a first-time
Yes.
investment for
Yes.
new capital, while active funds are actively managing this influx of requests for bridge capital. As a fund manager, you're looking to prioritize capital that you've already invested versus capital you haven't invested yet. More often than not, focusing on handling your existing portfolio and the bridge rounds that are on the go is going to be of a little bit of a higher, from a capacity perspective, that's going to be your priority before you're looking at all of these new deals and you're sourcing new deals and pieces like that. So even from like a timeline perspective, or like you said, how do I create a compelling narrative? They're certainly not interested in having a conversation with someone that isn't demonstrating that they're doing their work and they're trying to acknowledge the amount of risk that VCs are taking on to kind of help everyone weather this economic storm.
Yeah, and that's something that is private information. You can't really get yourself. Like we cannot even get it. It's not something that they need to particularly share, but it's something that other people need to understand for sure. Like, your current doggy needs new shoes. So you can't be keeping any more other pets right now.
Yeah, there we go.
Well, thank you so much, Sydney. So this was really great having you. And thank you guys for tuning in to another episode of Unlocking Venture Capital.